Hey everybody, how is it going? Welcome back to my channel. Well, surprise, surprise, the market is gapping down big again because yields are screaming higher. So I want to talk about that really quick. Then I want to get into some of the charts of the overall market because I think we're coming into some pretty significant levels. Then after that, as always, I'm going to get into my trading activities. So if you want to see if I made or lost any money, make sure you stick around for that. But let's get into this article real quick here. It says U.S. yields jump to 3-year highs and stocks slide on the rate outlooks. But if we scroll down here, we'll get into the important part of the articles. It says the yield on the benchmark 10-year Treasury rose 5 basis points to 2.765%. And it says the economists that were polled forecast the non-seasonally adjusted U.S. Consumer Price Index on Tuesday would post an 8.4% year-over-year increase in March. So there is no let up to the inflation that's out there. But right here is the part that I was most interested in. It says yields have surged in anticipation of Fed rate hikes, which Malarkey, the managing director of investment strategy and asset allocation at SLC Management, expects to be 50 basis points at each of the next 3 Fed policy meetings. So I remember I heard somebody on TV talking about how they expected the next 3 Fed rate hikes to be 50 points each. And everybody was kind of laughing at him, and it just seems like that opinion is picking up more and more steam, and it just seems like that is what is going to happen. But he again is quoted as saying the Fed is going to move aggressively, and the market has appropriately priced it in. Now, I don't think that the market has priced in 350-point rate hikes. Maybe I'm wrong, but it just seems like if 3 more rate hikes are coming in, we're probably going lower. And it's going to get extremely volatile, so buckle up. But he goes on to say that they don't want this to be an issue in the midterms, referring to the elections in November. That will determine whether the Republicans can wrestle control away from President Joe Biden's Democrats in the U.S. Senate and the House of Representatives. They also don't want to be in a position where they don't have inflation under control. And I do agree with him there. I think inflation is a much bigger issue than the economy. The economy is still strong. Theoretically, cranking up interest rates that fast would put us into a recession. But I think the biggest problem right now is inflation. And if they don't get inflation under control, at least a little bit more under control by November, I think they're going to have a tough time during November. And bringing up a chart of the 2-year Treasury yield going back 30 years, you can see it's been in a rather steady downtrend, and it got about to 0 just a couple of years ago. But so something obviously had to give. But over the last couple of weeks, this thing is just screaming higher, and it is in danger of breaking this long downtrend. So I think with the way the 2-year has been running up as fast as it has, chances are it's probably going to have a little bit of a pullback here eventually and then continue in that direction. So this, steady decline in 2-year Treasury yield could probably finally be over. All right, so let's jump into some of these market charts. We're going to start off with the QQQ, which of course is the ETF for the NASDAQ. But actually, before I get started, just please remember, I'm not a financial advisor. All of this is just my opinion. I'm just trying to show you what I see in these charts. So please make all of your own buying and selling decisions. But zooming in a little bit closer, we can see the NASDAQ is gapping down for the second time in 4 days. So they are not letting anybody out of this market. I thought for sure we're going to get more of a bounce up on this day right here. Once we came down into that 50-period simple moving average, I thought for sure we'd get one more bounce up, at least just enough to fill this gap before, they potentially ran it back down. But that was not the case. The market is just in a relentless downtrend. I think buyers are just waiting for more information to come out of the Fed with their possible rate hike decisions before they start taking some positions to the long side. Now, with all that being said, I think if we close near the lows of the day, I think there's a pretty good possibility we could be headed up the other way tomorrow because the market is in oversold territory. It looks like it's starting to hook up just a little bit, and we are definitely due for a bounce. It could take a couple of days or so, but I think we're getting pretty close for at least a reactionary bounce of a couple of days. But the QQQs are definitely the weakest one. If we jump over to the spider, which is the S&P 500, The S&P 500 is sitting right on that 50-period simple moving average. So that's another reason why I'm thinking if they end up running this market down and closing near the lows of the day, could end up having a reversal tomorrow. We can see the SPY is also in overbought territory on the stochastics, but not nearly as deep as the QQQs. And if we take a look at the Dow Jones, which is the DIA, you can see this one is holding up the best. Still hasn't broken that 50-period simple moving average, and actually not pulling back very hard as well. And the stochastic has already started to hook back up on the Dow Jones Industrial Average. Now, taking a look at the strongest sector, most likely, which is the XLE, which is the energy sector, this thing looks like it's about ready to break out to a new high. This is actually kind of surprising. I haven't really looked at energy over the last couple of days or so. And if you look at USO, which of course is the oil ETF, you can see it's in a pretty significant pullback. So the fact that the XLE is knocking on the door of a new high definitely tells you that they have a ton of relative strength, probably the most in the market. And just taking a look at gold real quick, we can see gold is starting to pick up some steam, starting to hook up as well. So even though some of the other commodities are selling off a little bit, it seems like gold is doing okay. And the same with silver. Silver breaking that uptrend. It is ending near the low of the day. There's still about a half an hour or so left in the trading days, so we'll have to see where these things shake out. But you know, all in all, it seems like the commodities are still the place to be in the market, and until we get a floor in the overall market, it just seems like commodities is where you're going to be. All right, so let's get into my trading activity for the day. The first one I want to talk about is VERU. This one was so redonkulous. I don't even think I want to talk about it, but whatever, I'll talk about it. Talked about this one in my pre-market watch list video that I put on my Patreon page. If you are interested in joining our Patreon group, our small trading group, the link is down there in the description. It's only $9.99 a month. But no pressure to do that. Simply hitting the like button is greatly appreciated. But I traded this one in the first few minutes of the day, so I'm going to go out on a limb and say I might have left some on the table. But let's go to the minute chart. I'll show you how this one shaped out. If you're familiar with my channel, I like to trade these gap and go trades in the first half hour or so of the trading day. I like to buy them once they pull back into a little bit of a rounded bottom. Kind of like how VERU did. After it makes a little bit of a ceiling, I like to buy that breakout. Let's see if I can situate this thing. So this is where I bought it. I bought at $5.86 and I sold at $6.24, right around there. And after this trade completed, I think I made about 6 or 7% on it. I stopped watching after about 5 minutes. I checked it again a few hours later, and I just couldn't believe this thing just exploded. It just kept going and going and going like the Energizer Bunny. This doesn't happen very often, but man, it might be the understatement of the year just to say that I left a little bit on the table. Most of these trades end up, going up and then kind of fading. Every once in a while you get one like this. I've thrown around the idea of, selling most of my position off when it hits a target and leaving just a tiny bit on in case you get a move like this. But these moves are so far few and far between that usually I'll probably end up getting stopped out on that last piece if I did. But man, what a big run in this stock. Jeez, I wish I would have held on to this one. This is one where you wish you just would have loaded the boat and just, got up from the computer when you were thinking about selling, passed out on the floor, and then woke up 5 hours later just to see, how much your position went up. But that's how it goes in the market. You got to be disciplined, stick to your strategy, because these type of things make you not want to be disciplined. They make you want to hold on longer than you usually should. But another trade that I did today was KNX. I bought some call options in KNX. This one looks like it could have completed a little bit of a climax sell. It's got to get over that 8-period exponential moving average. I bought the $50 call that expires in 39 days. I paid $1 a contract. That delta is sitting right around 28, I believe. So if we end up getting a move up in KNX, these should pay off very nicely. We got that big swoop down in the market. on a big volume a few days ago, and you got some nice big green candles coming in, and some nice green volume bars as well. So I think if we do get a bounce in the overall market, KNX is oversold, and this one could end up having a nice move up to at least the $50 mark. So those were the two trades that I made so far. There's still some time left in the trading day, and I haven't made a decision on whether I want to buy some call options in the SPY or the QQQ, because I'm thinking we could get a bounce tomorrow. But I'm going to end the video right there. If you guys have any questions, or if you see any good trades setting up in the market, make sure you let me know down there in the comment section. Thank you so much for watching this video all the way to the end. And until next time, take care, everybody.